Hey, everybody. Thanks for checking into our TDR Small Cap Sunday podcast here on a Sunday evening. I am your host, Shadd Dales. Thanks for checking in. 5 companies we're featuring here tonight with some new exciting industries that we're going to dive into, including an advertising technology company, a recycling technology company, an autonomous drone company, and of course, everyone's favorite, our cannabis pick of the week. So let's jump into it. It's Small Cap Sunday time, and welcome in TDR lead financial writer and analyst Bill McNarland. Happy Sunday evening. Good to see it. You did some good research this week.
Yeah, a lot of work. Went through a lot of different companies. We probably looked at 40 or 50 that
Did
we
you?
quickly discarded that didn't make the cut to be on the show. And we can talk a little bit about our observations of why those companies didn't make it. It'll come into our commentary of the ones that did.
Okay. So an AI-powered advertising technology company, which I find interesting because we all know the marketing landscape for companies and corporations across North America for that world is going to change and already is changing rapidly. I'm curious to learn more about this autonomous drone company. I know you've got a ton of experience in the drilling oil gas industry with based on your previous career being an analyst for 25 plus years. And then some great research. You initiated coverage this week on Terasen, and we're going to walk
hmm
people through some of the findings that you've had and why it is our cannabis pick of the week. So let's get right into it. But before we do that, all views on the TDR Small Cap podcast and the guests on that podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. All right. As I said, the number is 5. So let's begin. The first company, it's out of southwestern Ontario, Canada, in a city called Sarnia, Ontario, which is actually close to me. It's a company called Adore Clean Technologies. Market cap size is 66 million and trades on the CSE under the ticker symbol ACT and on the OTC under the ticker symbol ACTHF. Bill, this company focuses on developing chemical recycling technologies to basically turn or convert into valuable resources. I think before we get into company specifics, maybe walk us through, I guess, the total addressable market pertaining to this space, because it's a massive one. And it seems like every single day we're on the news, we're always talking about waste and environment pertaining to it.
Yeah, I looked at, the numbers that I came across is about $291 billion is what it's expected to be by 2030. So this market is just huge. But we can see, there's a lot of people, we've done some silly ideas in the past. We wanted energy. So we said, let's grow corn and turn that into ethanol. That just drove up corn prices and made it hard for some people in different parts of North America to get corn
Yeah.
that they needed for basics. I even once worked on a project in Kenya, Africa, where they were growing jatropha to try to make into diesel fuel and taking away farmland from
Wow.
people. This makes sense. Let's take our junk and turn it into something valuable
Yeah.
that we need.
Okay. And correction, it's Aduro. Aduro is, I think, is how you pronounce the actual name of the company.
Yeah, I believe it's Aduro. Yeah,
Aduro Clean Technologies,
technologies.
and again, trades on the CSE under the ticker symbol ACT and on the OTC under the ticker symbol ACTHF. So let's focus on this company now. Currently trades at 94 cents USD, has a market capitalization of 66 million USD. Daily volume is around $60,000, and outstanding shares is around 70 million. So walk us through on how this company has grown, and most importantly, has your attention.
Yeah, so this company is still in, I'm calling it the startup growth stage. I couldn't
Okay.
call it a startup. It has some revenue, but it's still not fully into the growth focus. So it's kind of in between that stage, and we can see that from its revenue. So its revenue last year was 211,000 US dollars,
Okay.
but that was 391% growth over the last 12 months, but that's not significant enough to take care of its burn rate. So this is the reason the majority of companies did not make it onto the show today, is because they have an idea and they're burning through capital. They're
Yep.
early stage companies, but they don't have enough runway. So that's one of the first things you got to look at in these companies. So the truth of the company is that it spends about $5 million a year in negative leverage free cash flow to work on what appears to be an excellent idea. So
Okay.
that's where we need to go deeper in analyzing.
So, most important thing, whether it's this company or any companies we're featuring within the format of this show, is always burn rate, especially when these companies are in growth stage, right?
Yeah, it's burn rate. And so you think of that this is normal that companies are going to raise more capital as
Yeah.
their idea grows, but the goal is that you have the stock going up as well. So what happens is a lot of times is that people are running out of capital, they need to raise equity, but their equity values are down. And that's
Mhm.
exactly what you don't want.
Something important too in the early stages. Is there any short-term catalyst for this company in the development timeline pertaining to it?
They had a development timeline. I looked at it, it seems reasonable. They put out all their projects there. And I think, well, that looks reasonable. But my question came back to, can they support their burn? And so that I went to in deep. If you asked me about this about a month ago, I
Yeah.
would have said, well, they have about $2.1 million US in current assets. Um, but they just had a news release last week. They successfully raised about 2.6 US dollars. It was
Okay.
oversubscribed in a
Yeah.
placement. But as we look at the chart, which we had seen, the stock is up 40% this year. So this is a good time to raise a bit of new capital to keep them going. And so that answered my question is can they work through their burn while they're waiting for this idea to come to execute into more revenue regarding their thesis?
2 point how much did you say they raised?
It was $2.6 million. And what was interesting is there was a press release that went out in May and says they're going to raise a bit less than that.
Okay.
But then they had more interest than they thought. So they raised it to 2.6 million US, about 3.5 million Canadian. It was actually, and then they closed subscriptions saying, we're not taking any more
Hmm.
because there was enough interest. But what was interesting about that in the last week is this is big news for the company. It answers the fundamental question I was looking for, but the stock didn't really move. So I don't think a lot of investors are asking the right questions
So what
because
is the
this
right
was
question
super,
then?
do can they support their burn?
Yeah.
We didn't know it a month ago. We know it now. So this stock is more valuable than it was a month ago. So I
So
was very intrigued by this.
So, needless to say that their concept is working, especially when you look at the overall growth, that they've achieved over the last 12 months. That's a big whopping number. So, what they do for revenue last year?
Yeah, the revenue was modest, but it was growing. So the
Yeah.
actual number was 211,000 US dollars, but it was 391% growth. And they put
Okay.
that they're now into their development cycle in 2024 that they feel they can start monetizing on the revenue side significantly. So this is kind of the year that they start going into being the startup to being into the growth company.
So, what are things that you would watch closely about this company over the next 12 months?
I want to make sure that the revenue continues to grow,
Yeah.
and then also that they keep projecting out their burn rate and keep seeing eventually when they do need more capital, is our investors excited? Is the stock going up? And if you have that combination, that makes for a successful transition from a startup company into a growth company.
Okay. So, oversubscribed, they raised 2.6 and saw some substantial growth. Okay. Moment of truth. Is this a stock that you would own?
Yes, I would buy a company like this because I really believe in the thesis in the marketplace that the company has. I'm not overly concerned about the burn rate because the market is supporting them,
Yeah.
and there's other interested investors that will continue to fund their transition into a growth company. So for that, this is a company I'm very interested in and would buy.
Well, hello to all of our viewers from Sarnia, Ontario, Canada. Again, this trades on the CSC under the ticker symbol ACT and on the OTC under the ticker symbol ACTHF. Again, Aduro Clean Technologies Incorporated. All right, so we got our first check mark of the evening. Let's now move on to our next one. It's an interesting one. It's a drone company called AgEagle. They're based out of Wichita, Kansas, which trades on the New York Stock Exchange. Current price at the time of this podcast is 62 cents and a market cap of 7.6 million. So tell us more about this company and again why they have your interest.
Well, first of all, I'm just interested in drone technology. I think
Who
that's
isn't, right?
interesting. Yeah, and so they were serving purposes for agriculture, and this makes sense that you have big, farm operations, and there's a lot more efficiency using a drone instead of other methods to check on things. And so I was like, wow, this is really interesting. But like other times too, I looked at the 1 year stock chart that we bring up here, and I noticed it's down 89%. And
Whoa.
so I was like, okay, what's going on here? I want to find out all about this story.
So, look, we don't bring up drone companies all that often. So, when you're looking at this space and you're new to it, like what are some of the things I guess that you should be analyzing? When I think obviously the first number that you outline is a big one, but is there much competition within this
Yeah,
industry?
there was, so I wanted to see if there's specific stocks in this, and I could find three or four of them. The market is definitely growing. This is the largest long term CAGR that I've seen on our show so far. So the 7 year number to 2031 is expected to grow 25% a year. So I know this industry is booming.
Massive.
Yeah. So I love to find a company within the space.
Do we see the day that drones are dropping your Amazon packages at the front door?
Yeah. Oh, I think it's not that far off.
All right, as we bring up these charts and move along further, what was the revenue LTM?
Yeah, so the revenue was $13.8 million last year, so that was real, but it fell by 29.7% the year before.
And why
So,
was that?
well, I looked into it. So, technology is quickly evolving with
Totally.
their competitors as well. So, they
Absolutely.
had some really popular products, and then you can see that their newer renditions of the products are not as popular.
So, how do you succeed in this industry? Because we all know you never ever can keep up with technology. And a lot of the big conglomerate companies have the infrastructure and the separate divisions to always stay ahead of the game. So, how do you break ahead and eventually build a footprint within the market? And I would think a lot of these small cap companies with the right technology eventually are getting bought out.
Yeah, that's a challenging. And so then I went further and tried to answer the question too, like, is this company sustainable to be in business in the next 2-3 years? And one clue was the stock price, but that sometimes tells you there's a great deal on something that's misunderstood. But we had to go a little bit deeper to see what the how the company was operating compared to their burn rate and their revenue potential.
Okay. So, what did we find as far as levered free cash flow?
Yeah, so to put this in perspective, their market cap is $7.6 million. That's the
Okay.
total value of their business.
Okay.
Their leverage free cash flow was negative 8.3 million in the last 12 months.
Hmm. All right. So, a negative number that you just outlined. So, when did this company launch?
This company has a long history. It goes back to 1999 when I look at the stock chart. So there is quite a
That's a
history
whop.
there.
That's a whopping number then in the last 12 months.
Yeah, it's had its up and downs for sure. But this brings up a couple challenges. And remember I told you there was 20, 30, or almost 40 companies that didn't make it on the show because of different reasons. The
Yep.
main reason was because the companies have a technology, they have an idea, but they can't support their burn rate, and their stock is down, and it's a bad time to be raising capital. So as we said earlier, this company's down 89% in their stock price.
Wow.
um, they had a bigger loss in leverage free cash flow than their market cap. So they have current assets of $9.3 million. So it looks like they have a runway just over a year. What happens then? Your stock's way down, your revenue's down. You got to have a real turnaround to make this stock work. But I can't see it when I review the company's
Yeah.
materials.
So not really a lot of upside for this company at all. And I think it's important to share, and we do bring this up from time to time on this show, is that we want to highlight every week. I know a lot of retail investors look at the small cap space, it's like, A, are these stocks on sale? Or B, is it a trap? Clearly, this is a trap.
Yeah. So and you bring up a great point. So when you're analyzing a stock, first there's the idea and thesis. That's the easy part. But secondly, can the financials bring the
Yeah.
company through to execute on their thesis?
Okay. Moment of truth. Would you own this stock? And there's our first red X. You would not own this
No,
stock.
no.
All right, let's now switch to our third company here this evening, and it involves the ever growing and popular AI industry bill. It's a company out of Toronto, Canada called Adcore Incorporated, which trades on the TSX under the ticker symbol ADCO and on the OTCQX under the ticker symbol ADCOF. Current stock price, or share price, I should say, is 17 cents. Shares outstanding are 60.2 million. This, as I said, is an AI-powered marketing technology, and we all know how much marketing through AI is, it's changing rapidly. What would you say, as far as like, the future of this industry? I think the key, obviously, is to make sure that if you are going to have some sort of platform like this, you're working with big brands, especially online players like Google and Meta, which they are. So you want to elaborate a little bit more on that?
Yeah. So what I see here is I know digital advertising is here to stay. Everyone's concerned about their digital media footprint. I know we are. We talk about this internally all the time. Other companies are talking about this all the time. And so I wasn't surprised when I pulled up some statistics formally and found out this industry is growing. But we knew that. Where this company helps is there's the old days, and they describe it in 2007, where you made a plan with a consultant to help spend some money on Google, or you did
That
it
was
on
it.
your own. Yeah, now you have a bunch of choices. So for example, this company, they work to put together a proper plan for you with Instagram, Meta, YouTube, TikTok, Microsoft Bing, and such. But then they put together tools and applications using AI to be able to make this roll out better, to take in better knowledge, to roll out, and also to analyze the results. And so they're kind of a modern form of a hybrid digital
Yeah.
agency to help companies like ours to be able to have a better digital footprint.
Well, I do know with a lot of ad agencies and the cost that they charge as far as retainers, and a lot of the times when you're partnered up with a lot of these or I should say ad agencies, traditional ones, any data that you collect over time, they actually keep it themselves. So that leverages them to make sure that they sustain their contracts and clients for a long period of time. But with this, it's very hands-on and controlled by a lot of companies specifically. And we all know in this day and age, it's all about collecting data. And you're not at the mercy, obviously, of a retainer that you're paying a third party company. So, with that, I would think that would obviously entice a lot of these companies. So, let's jump to the charts. What'd you find when it came to revenue LTM?
Yeah, so this is where it got interesting. The company's, real. They have $23.1 million in the last year to date revenue in US dollars. And their growth was 10.1 over
Impressive.
the last year. And over the last 5 years, they've had their ups and downs, but their 5 year CAGR growth rate is 10.8%.
Okay.
So that's real.
Despite the obvious, like as far as short-term catalysts, I would think it's just emerging trends, especially as the AI industry continues to expand and grow and become more familiarized with everyday people. I would think those are some of the short-term catalysts and explains probably the reasons for their growth over the past year.
Yeah, so they have the growing industry. So what we have to look for then is we have to pick a pony that also has financial strength, that we don't
Bingo.
have to worry about them turning off their lights when they're enjoying the nice trends of the industry.
So when you're looking at this space and everybody always wants to jump into AI and just have a startup company in AI, what are some notable things that you want to watch and pay attention to when it comes to companies in this space?
Well, this company has a gross margin of 41.9%. So they're actually
Wow.
making, significant cash flow off their customers. But the balance sheet was what really stood out here. So in US dollars, the stock price is 17 cents. They have 9 cents cash per share.
Wow.
So half the business, the value of the business is sitting there in cash.
Mm-hmm.
So because of that, it's no surprise they had a credit rating of 8.3. So this is an
Strong.
example. Yeah. So this is an example where I don't know 100% if I've picked the right pony in the industry, but I'm pretty sure this one's not going to go away. So I
Well,
believe in the industry and I know it's financially solid. And so I can watch them progress on their thesis.
as much as times are changing, one thing that will still and never go away is a healthy balance sheet. The most important thing for any long-term survival for a business. What'd you find as far as gross margin again?
Yeah, 41.9%.
Okay.
So they're in a good position here. They're growing. Their leverage free cash flow was positive 1.6 million US dollars last year. So they check all the boxes for their financials, and they're in a fast growing area. And when we look at the business, we know this industry. We know that there's room for a competent, well financed player to grow.
Content creation, kind of like what we do in digital marketing. It is the thing of the future. What do you do within a 5 to 10 second span to grab a viewer's attention and it pertaining to them? We all know data that can be collected to grab that right audience. But this is a big thing. And I think every single company across North America, or for that matter, the world, is talking about this nonstop, all day, every day when it comes to a digital marketing strategy. So massive market opportunity as we move forward, right? Okay. So moment of truth, and I think we're going to get our second check mark of the day for Adcore Incorporated. Again, trades on the TSX under the ticker symbol ADCO. Would you own this stock?
Absolutely. A strong balance sheet, strong industry. This is a story I want to watch and own.
Good find. It's a really good find in our own backyard. All right, fourth
Yeah.
company on the list, and it's a hot one for those that follow the oil and gas industry, and it's a drilling company, and more specifically, a service company called AKITA Drilling, which trades on the TSX under the ticker symbol AKT.A and on the OTC under the ticker symbol AKTAF. I said off the top, this is a service company for the oil and gas industry. So, what do I mean by that? If you're going to drill and you're going to need the machinery, and if you don't have a cool $25 million, this is where they come in. You want to explain a little bit more?
Yeah, so this is just like investors that want to buy a home and rent it out,
Yeah.
except it's a lot more exciting. So the idea is that these machines
Good way of
are
putting it.
very expensive, and I've seen this time and time again. There will be individuals that'll go around and say, "Hey, I got this great oil project,"
Yeah.
and they'll get some investors to come to them, and the first thing the money has to be spent on is drilling.
Right.
So the drilling companies, the service companies are less risk than the person going out exploring.
Yes.
Instead, they're just getting paid to do this. So drilling machines are expensive, but they also rent out for a lot.
Hey,
Average rents can
a
be
lot
$25,000 a day.
a
Yeah. So you,
day.
yeah. So it's just like owning a home that you want to rent out for a fee, but it's a little bit more exciting than that.
Yeah, market cap little over 37 million. Outstanding shares is 39.3, so tight share float. Yet trading volume is light at only $30,000 a day. Why is that, you think? Just not enough attention, or
Yeah,
people
I
know
don't
who they
think
are?
not enough attention. Yeah, I think that's it.
What stage? You've got a lot of experience in this field. So how would you best describe what stage this company is currently ranking in?
This is a mature growth company, so they
Okay.
have tons of assets. They're trying to improve things, but they're not inventing a new idea. And so the secret to this business is you're never going to get the time exactly right. I'll share what's good to look for in the timing, but you're not going to get it right. But you want a financially strong company to invest in.
So it's in a lot of ways runway when you're working on a lot of these projects. That's the thesis that you would focus on when looking at companies within this space.
Yeah, because there's a couple of variables. So the first thing gets reported all the time is how much demand is there for these rigs. Naturally, when the price of oil goes up and people get excited, they want to go out and drill more.
Yep.
Um, and so that's when these companies are making more revenue. But also their stock prices is usually up then as well. So it's not necessarily the best time of a situation. And every week, there's actually data on this. There's a report that comes out about how many drilling rigs are being used in North America and also offshore. And people track this closely. I'm not joking. Like I know
How many
people.
do we know? Like, do you have an idea as to like how many are
Yeah.
being
So on June 7th, there was 594 rigs being used in North America, 143 in Canada. 594 in the US, 143 in Canada, and 953 internationally. People track this really, really closely to figure out the use.
So a lot of their machinery that they own, is this being rented out across North America or for that matter, like globally?
This is just so they are an inland driller, and
Okay.
so it's mostly just Texas and Alberta
Okay.
for the types of rigs that they have.
Well, step aside if you're driving down the highway and you see that being transported from one place to the next, that would be a massive, massive load that they're basically carrying down. But yeah, $25,000 a day. Those are some big numbers to say the least.
Yeah, so I want to share one chart here just to help us understand the industry a little bit more. This is a chart that shows how many rigs have been in use per month since 1988. And we can see how volatile it is. And this also goes with the day rates, how much they can charge for these rigs as well.
Yeah.
So it's a volatile business. It's like renting a house, and the prices are changing all the time. That
Yeah.
you're getting paid per day by your tenant, and it's going up and down. But this is just part of the business, and it makes it exciting because there's some volatility in the stock prices for traders.
What do you think you've learned most about your history and experience in this field about the drilling industry, and why in a lot of your ways it's an interesting one?
The time to buy is not when things are going well. Because
Hmm.
what happens is when all of a sudden all the good news is there that there's no rigs available, the rates are through the roof. We've never seen these rates before. And then typically there's overconfidence sometimes in the industry, and people take out big debt lines on the companies. And then all of a sudden the banks are like, yeah, this makes sense. We haven't been in this industry for 15 years. Let's
Hmm.
now get into it and give them big checks. And the next thing you know, 6 months later, people are scratching their heads saying, wow, I don't know what happened. That ended badly, but cycles happen.
Yeah.
And so the time to buy these is when you find one that's financially secure,
Yeah.
pretend you can't predict the future price of oil, and buy it based on when it seems to be a good value of a time to buy a driller.
Okay. Good to know. Next chart I want to bring up now is, what did you find as far as revenue LTM?
So it's real. They had $152 million of revenue last year. Their growth rate is volatile. Last year it was 6% lower over 12 months, but on a 5 year basis, it was 13.8, and 3
Okay.
years 23.5. So they're growing, but their leverage free cash flow last year was $12.4 million. When
Yep.
you compare that to their market cap of 36, it's only trading 3 times higher than its leverage free cash flow.
Very conservative.
Yeah.
Huh. What'd you find as far as gross margin?
Yeah, their gross margin is good, 25% on the business that they're in. But the real beauty was in the balance sheet. If you and I wanted to go start this business, we'd have to go out and buy a bunch of rigs to get going. So this company, their tangible assets on their book are $190 million. They have debt of
Yeah.
73. So
Yeah.
that says there's 117 million of assets there. And the market cap's only 36.
Hmm.
But they had depreciation last year at 21 million. So I think those assets are worth a lot more than they are. But even just using accounting, it looks like their asset values are 4 or 5 times worth what the stock is. So this is an example when I say, look, when the drillers are inexpensive compared to their assets,
Yes.
this is the time to look at it. The credit rating came out at a 6. So this
Hmm.
supports my thesis of buying them when they're financially strong, regardless what's happening to the price of oil.
Okay. So, moment of truth. This is definitely a stock that you would own.
Absolutely. And I believe that this is the timing to start looking for drillers.
I've got a friend of mine. He's into robotics, and this is the same thing. He buys some of these used machinery, and it's that industry. If you have some of those assets that are available, it's incredible what these things can rent out at, and how it's a huge viable industry to say the least. But $25,000 a day, as I said earlier, is some big numbers to say the least. But okay, we got our third check mark out of four. Last, and I know it's probably everybody's favorite, is our cannabis pick of the week. And this week, da 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 da, drum roll, features multi-state operator Terasen, which trades on the TSX under the ticker symbol TSND. Seems time flies. It was probably around a year ago, early July last year, where they became the first multi-state operating cannabis company out of the U.S. to list on a senior exchange, which was the TSX. That was a big monumental moment. They also trade on the OTCQX under the ticker symbol TSNDF. Many people within this podcast are very familiar with this story. One thing I do want to highlight, Bill, is that you began initiating coverage on this company this week. And if you want to learn more about research and the research reports that we basically have outlined the last couple of weeks, but more specifically Terasen, make sure to subscribe to our Baked In newsletter. The link is actually located down below in our description in this YouTube video. And here's the great thing, Bill. It's all for free. So that's the great thing. So let's begin, as I said, with the company. This is one of the best financially run companies in the U.S. cannabis landscape. They operate in key markets like New Jersey, Pennsylvania, Maryland, more notably Michigan, which had some big news this week, became the number one state in America when it comes to total grams of flower sold since December of 2022. It passed California last month, and Michigan is a state that has unlimited amount of licenses, and they've crafted a heck of a story, obviously related to the Gage cannabis brand. So when you're looking at this company, Bill, I know there's a lot of comparables that you like to use when doing research on companies within this industry. So what would you say? And this is a great thing I want to walk everybody through here tonight. What are 7 things that investors should know before investing in this company?
Yeah, so and that's a great question. So the point is we compared Terasen to 13 other similar competitors, and we want to see to help investors to think if they want to buy a certain type of company, what is the best one for them in the strengths that they're looking for? And so comparative analysis, when you have the amount of companies there, is the best way to analyze these companies.
All right, when we look at this chart, this is going to help illustrate your thoughts process when it came to comparisons. So, first thing I want to bring up when comparing to other companies on this chart is revenue growth. What can you walk us through?
Yeah, so in this chart here, we look at their last year 12-month revenue growth and also their 3-year CAGR. What is interesting is Terasen's kept up with the other companies that are in its benchmark over the last 3 years. But we noticed something in the earnings reports in the last year is
Okay.
that the revenue growth rates of cannabis companies slowed down, but not for Terasen. Terasen in the last 12 months had a
Good
growth rate
point.
of 22.3%. So this was very unusual to get a print that was that high in the US.
All right. That's a very good stat that I think a lot of the senior executives within that company will definitely agree. Next up, gross margins. What'd you find?
This is where the company is leading compared to its benchmark in two areas. One, its print of a gross marginal profit was 50.1. And that's always usually what we say is the rule that we're looking for eventually is for these companies to get to 50%. But it was their change in gross margin that really stood out in the last 12 months. Their competitors, on average, their gross marginal profit actually went down by about 1%. But Terasen improved theirs by 5.9%. The actual number, not the percentage. And so
Okay.
this is significant that besides their
Very.
revenue growing, they were also growing their gross margins.
Okay. Next up, SG&A. What'd you find? I know
So this
they run a very efficient company.
Yeah, so this is the spending that you do on employees and all
Yep.
your other expenses outside the actual cost to make the product. So they're very conservative this way. They've been cutting back on costs. They reduced their SG&A by 10.2% over the last 12 months. So this brought them in at 35.1. So on this chart, you want to be lower. You want to be
Yes.
as low as possible. So with them, again, they outperform their competitors in this area.
Well, what I like about Chairman Jason Wild, when we have this MJ Biz conference in Vegas, I usually end up staying at the Cosmopolitan and spend $1,000 a month. And what is he doing? He's staying at an Airbnb at $200 a month. That just goes to show, small little detailed things that he looks at as far as, he doesn't leave any stone unturned when it comes to expenses. So smart, and I think it's important within this overall industry right now. But like I said, one of the best efficiently run companies within the space. Let's now shift to leverage. What did you find?
Yeah, so Terasen has less leverage than its peers. So a couple things to note here. Maybe people are looking for a more leverage because it can bring more additional return, but Terasen's on the conservative side. Now the other thing to note is besides revenue slowing across the cannabis board,
Yeah.
um, leverage increased with all the companies, but Terasen on average increased much less. They grew their leverage by 7.25%, but the median was about 11.24. So not only do they have a more conservative balance sheet,
Yeah.
but they've also added less debt compared to the benchmark.
Well, some notable growth trajectories for the industry as Ohio is going live, and I know they have expressed in a couple of press releases their interest on jumping into that market. So, be curious to see as to how that develops in due time. But that's going to go live, and obviously is going to help with some of the revenue growth opportunities when it comes to a lot of these companies. Next up, and an important one is liquidity. What'd you find?
So this is something to watch. So their current ratio, which shows liquidity, you want to be higher, not lower, is less than the benchmark average. And this is because the majority of their debt on their balance sheet needs to be refinanced by Q4. Now, on May 9th, they had their call with analysts,
Yep.
and the CFO stated that they're actively looking at different options. They're going to try to find a lower cost of capital to improve their situation. I feel this is very credible. I know that they can refinance this
Big
credit.
time. Yeah.
The credit will be there. It comes down to the question of what is the cost, and because they're in a strong position compared to their peers, I think they're going to get very decent financing on this. Um, as soon as they get that financing officially, their current ratio will normalize compared to the benchmark because their assets, their debt will be more than 1 year out.
Yeah. Well, some big notable names that had to push their material debt out to 2026 and 2027, something they had to do because it was due obviously this year. But Terasen in a situation has built a good model where it's more about being patient and selective, which a lot of companies obviously can't say within this industry. Okay, you just highlighted liquidity. Let's now focus on current cash flow. What did you find?
They're a leader here on the benchmark as well. So their leverage free cash flow margin is 7.4%. So that means that when someone buys $100 worth of products from them, 7 cents, 7.4 cents is going into their pocket that they can use for other purposes. So that they're a leader there, but also in the growth, they improved that by 19% over the last 12 months as well. And so this, when it comes to cash flow, they're leading in the benchmark as well.
Okay, great. And finally, our last thing that we want to bring up, and it's the most important one, valuation. What did you learn?
Yeah, so their current price is $1.41 in US dollars. What I took a look at was, first of all, is we used three different valuation metrics. When we blended that together, it said that it's undervalued. It should be $2.82. But then also we calculated what would happen if 280E changes came in and those tax savings instead were earnings. And we looked at a multiple, and that would bring the price target to 470. So conservatively, we blend those together, and we come up with a target price of $3.76 through all our analysis. And so that would bring a nice upside to investors compared to the current price.
All right, so it looks like it's 4 to 5 here tonight. Would you own this stock? I think we got our final check mark.
Yeah, for sure, absolutely. If having access to the cannabis space, this is a nice name because it's below the $500 million of market cap.
Yeah.
It's not one of the large companies, but yet it has a very high growth, and the valuation is very very low. They're trading close to a 52-week low right now.
Yeah, it's crazy. And I know, like, when you look at some of the short-term horizons for this industry, I do know that once things start to turn a corner, this has huge upside potential. But again, do your own due diligence. Again, this is not investment advice. We're just basically finding you or providing you information that we've learned. So, one thing I do want to highlight too, and I said earlier that for all these people out there, it is important to share that. Look, if you want to learn about some of the research that Bill's diving into and brainstorming, again, this is all free. Subscribe to our Baked In newsletter, and it's simplistic information for you, the everyday investor, to basically learn. So if you haven't done so already, click on the link here in the description video below, or log on to thedalesreport.com and subscribe to our Baked In newsletter. And you'll be able to basically obtain not only a lot of the research for Terasen, but Cureleaf, Barimed, Trulieve, Verano, New Lake Capital, GTI. These are some of the notable names that you've done over the past week. So a lot of hard work to say the least, right?
Yep.
All right. This has been good. Good show again this week. And hopefully our viewers got a love the information that we shared. Bill put in, what was it, 30, 40 companies you reviewed?
Yep. To be able to get down to these, and we kicked out a lot, and then after we find the names, to do research light on these companies takes 2-3 hours, and then to do something like we did on Terasen, that's
Yeah.
a 20-25 hour engagement. So it's a lot of work to put the research together.
Show this man some love. Smash that like button, leave some comments, and show how much you appreciate the hard work that he's put in. And at the same time, too, if you want access to the information based on that 20 or 25 hours of work, then subscribe to the Baked In newsletter. This has been great.
They can
Love
also
these
follow
shows.
me on Twitter. I want to get to my 20th follower this weekend.
What's your handle?
Right here, just below my name.
Oh, right there.
Arns
Done.
put it
Looking at the
on.
lower
Arns put it on.
handle. Good job, Arns. You know what? We got to start pushing that more and more and more. But yeah, this has been great. Quick wrap up again. You had a good drilling company that you liked. Obviously, Terasen, the autonomous drone company. That's a trap, not a stock, that's on sale. Also, an AI marketing strategy platform that has huge upside potential. And there's a lot of great stories that basically we learned this week. But
and the recycling,
yeah.
as well, close to. Yeah.
All right. And one last company I want to highlight is the recycling technology company based out of Sarnia, Ontario, Canada, Aduro Clean Technologies. Capsize 66 million. So it's a good find to say the least. And they had some big upside potential. and big growth over the past 12 months. So some key highlights here tonight, but some great finds. In the meantime, enjoy the rest of your weekend, and we'll check back in with you this week.
Great. Take care.
All right. Thanks, Bill. Hey, everyone. Thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So, again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel, because in the end, we wouldn't be here without you. Thanks again, everyone.